Okay, I think we got to start now. Yeah, we'll need to start now. Hello, can you hear me, please? Can you hear me? If you can hear me, can you just let me know? Can I get a feedback if anyone can hear me?
Yes, sir.
Okay, you can hear me. Thank you very much. Okay, thank you very much. Thank you for the feedback. I appreciate you. Thank you. So we will not be staying too long because this is going to be recorded. Fine, but it's just good for us, for those who come in early, to get the benefit of coming in early, and that's to start early so we won't keep them waiting. Well, welcome once again to the weekly webinar of Meaningful Realtors, hosted today by Mr. Meaningful. I need to clarify that next week it may not be hosted by me. Next week we may have people joining us on the podcast, but today, yeah, it's hosted by Mr. Meaningful, and I appreciate all those who are coming in early. This is a weekly series that comes up by 7:30 p.m. every Thursday. This comes up by 7:30 p.m. every Thursday. In the last couple of weeks, we've been looking at a particular topic: invest with clarity. Invest with clarity. And today we are looking at the topic we have called where exactly is your money going, or where should your money go? Where should your money go? It's a question. It's actually coming as a question. And in this series, today's particular presentation, we'll be looking at different options of investment, and we'll let you know. And truthfully, let me just say up front that none of these investment options is bad. They're all very good, but you as a person should actually find out which one is best for you. That is what we are going to look at this evening. Once again, the topic of the webinar is where should your money go? Which direction? What errand should you do? Because when you work and you don't send your money on errand, that money will keep depreciating. That's the truth. And that's part of what we're actually going to look at today rather. So before I go ahead, let me do a brief introduction for those who are joining us for the first time. My name is Sheikh Bushonowo, but for those who know me, you call me Mr. Meaningful. Yeah, and I'm happy to be called that name, Mr. Meaningful. Because if it doesn't make meaning, I'm not part of it. For everything that makes meaning, you find me there. Making money meaningfully, serving God meaningfully, being of help to humanity meaningfully, you will find me there. And that's what I render. That's the service I render to. That's what I give myself to. And that's why I call myself, or I'm being called, rather, Mr. Meaningful. So for today, we are looking at where should your money go. A brief more about myself. Well, I did banking for a couple of years. Yeah, when I say a couple of years, a little over 2 decades. Yeah, going to the middle of the 3rd decade. Yeah, I think. Okay, yeah, not exactly. A little over 2 decades. I did banking for a little over 2 decades. And for the past 8 years, thereabout, we've been running Meaningful Realtors. I joined Meaningful Realtors fully after I left my banking career about 4 years ago, thereabout. Yeah, don't forgive me if I say thereabout. When it comes to time. If it's money, I won't forget, but if it's time, I may forget, right? So about 4 years ago, I moved into Meaningful Realtors fully. I'm the co-partner, or the co-founder. Yeah, the co-founder of Meaningful Realtors. I work with a partner who has also done over 20 years in financial services. So combined, we have a combination of over 4 decades. Yes, over 4 decades in financial services, and I think that's what commending. Can you give us a round of applause? Give us a round of applause. So when we come and we say we are financial advisors using real estate as a vehicle, we are saying what we do. We have the local standard to say we can do that, and we can guide you through your real estate investments meaningfully. So today we want to look at the presentation, or the topic, where should your money go. I'm going to be running you through slides So please just go along with me as I run you through the slide presentation for where should your money go. And it's a clear comparison, like you can, sorry, can you see my screen? Please, can you confirm if you can see my screen? I'd like to okay, thank you very much. Thank you very much, Onofua. I appreciate it. Thank you for that feedback. So, where should your money go? And today we're looking at a clear comparison of different different investment options. We're going to look at which this is what this offers you. This is what you need to look at if you want to do this. This is what you need to look at if you are doing the other, if you are going the other way. So just keep your minds open. At the end of the day, we're going to let you know that, and I said that before, that none of these options is wrong. None is bad. All you just need to do is you choose the one that is best for you. So we move on quickly, and we're saying in today's real investment landscape, you have different options. You have fixed deposits and savings, you have stocks and mutual funds, you have crypto. I don't know about that one though, but at least I know it's an investment option, right? Crypto and digital assets, you have traditional real estate, and you have the buyback investment model. We're going to compare and look at these these 5 investment options, and afterwards make a decision which one you actually want to go for. And we're starting with fixed deposits and savings. Let me also mention the fact that if you're on this call and probably you are like me, you have an investment background, and you feel like, oh, this thing is not, this is a master class that is just supposed to give you an overview. Because if you pick each of these topics, you can spend hours talking about fixed deposits and savings. So don't expect all the nitty-gritty. We're just going to look at it, give you the basics, and you can see it clearly. When we look at fixed deposit and savings as option 1, to my left, which might be to your own right or to your left, okay, to my own left is, you see what works and the things that you look out for. What works simply means how advantageous is this opportunity, is this investment vehicle. But if you want to use that vehicle, these are also the things you need to consider. These are the downside. Okay, let me just use that word. These are the upside, while these are the low sides of it. But all the same, you need to just do your balancing, and if that's what you prefer, fantastic. What works? Safe and government backed. Yeah. Fixed deposits. Yeah. Whether you call it treasury bills, which is where the safe government back comes in, but is a fixed investment option that you say you're keeping your money in, locking your money in for the next 30 days, for the next 60 days, for the next 90 days, or even for 180 days. You can even do 365 days. So it's safe, it's there. And when you put your money there, you don't need day-to-day involvement. It's just there. You know that at the end of the 30-day, or at the end of the 60, 90, 180, or 365 days, you are going to go back. You are going to get your money because yesterday, I don't know how many of us saw this teaser that went out yesterday on my WhatsApp, and somebody actually replied me, and that was his response. He said, with fixed deposit, he is sure that when his money goes out, he is going to get what is promised to him. Fantastic. If you put your money in treasury bills, nothing will happen to you. On the agreed date, you'll get your money as agreed. It also has predictable interest schedule or schedule, whichever, British or American. Just, you know what I'm saying? So it has predictable interest schedule, right? You know, you're putting your money at 18%, at 17%, at 20%. At the end of the period, agreed period, you're going to get it. And it's easy to understand. No too much story. Anybody can actually do it. Anybody can do it. So it's simple. But what are the downsides of fixed deposits and savings? And that is the truth. What you're going to hear now is the truth. Returns really beat inflation. You put your money in treasury bill or in fixed deposit, the bank will give you 12% per annum. Inflation is at 14%, at 15%, at 18%. So at the end of the day, you are losing money. True, that's the truth. Because your money loses real purchasing power. That's another downside. Your money loses real purchasing power. and the depreciation of the naira erodes whatever might look like a gain that you have gained from savings. For people, the fixed deposit is even better, but you keep your money in a savings account where you get 7%, where you get 4%, 5%, 6%. They tell you is high savings, high return savings account, and they're giving you 7 or 8, and the inflation is twice that amount. So you're not making money, true, but at least you are sure that your money is there. When you open your bank app, or you go to the bank to go and write your account number, you put your signature, tell them they will give you have that confidence that your money is there. Abi, okay. The other part is that you play it safe. You are playing safe, but not smart. It is safe for emergency reserves, but not a good growth engine. It's not a good growth. It's yes, and true. What the money you should keep in savings account is the money that you want to use to take advantage of opportunities when they come. Not the money that you want to grow. The money will not grow. True. So that is that for fixed deposit. So if you are somebody who I want to see my money that it is there, open my bank app and see my money that is there, no problem. Do savings account. Do fixed deposit. Second one is stocks and mutual funds. Stock and mutual funds. So when I tell people I'm an investment advisor, some people, and I quickly clarify, I tell people, I said, I use real estate as a vehicle. I advise you on how you can grow your money, but using real. So when you come to me about stocks or mutual funds, it's not my forte. Yeah, but let's look at what works for stocks and mutual funds. It has potential for high returns. Yes, potential. Note. Dividends add passive income. Every year they pay you dividends. It has passive income. It's easy to start small. You can start the stocks, investing in stocks or mutual funds with 100,000, 150,000, or even lower, and it's a globally accessible platform. You can trade in Apple shares right from Nigeria. There are different platforms where you can do that. Bamboo is there, and a couple of others that you can trade, even international stocks. So it's a globally accessible platform. But if you want to go into stocks, these are the things that you need to consider: market volatility, gains and losses, both sides. Market volatility moves, right? It also requires monitoring and knowledge. You need to keep looking at. You open it every day. Those days now, those are papa. They will open newspaper every day. They will be looking at reading the thing. It has not changed. It's still the same. You still have to monitor it. It requires monitoring and good knowledge of the market you are investing in. And there's no guaranteed exit value. You can put your money in and expect to gain some money, and at the end of the period, you probably might not make as much as you think you will do. That is there as well. There's also emotional decisions that cost investors dearly. When somebody hears that a Lever Brothers shares has dropped, those days of Lever Brothers, or you know them. But the way our parents used to feel, it can be emotionally disturbing, right? But if you want to put your money in for the long term, yeah, it's good. Put your money in for the long term. Buy shares at 2 naira. Those shares that our parents bought at Guinness shares and all those things, they bought at some very, very ridiculous amount. Years after, Wema Bank shares, years after, those things have appreciated very well. So if you want to go for the very long haul, stocks and mutual funds are not bad. You can go in for that. Crypto and digital assets. This one is one that is above my head. True, I'm trying to wrap my head around it, but yes. What works with that? It has massive upside in bull market when they will tell you, oh, the thing came out at so amount of dollars, it has gained so much, it has gained some thousands of dollars. Fine. It's also globally liquid. So you have 24/7 access to it. You can trade across borders using crypto. It also hedge against fiat devaluation. Fiat is a normal currency, right? With cryptocurrency, you can hedge against normal currency devaluation. And growing adoption, like I said, is globally accepted. It's becoming more accepted now for transactions. However, there are the downsides of crypto and digital assets. What do they call the other one? Is it NFC or whatever? I can't remember. Let's just leave it at crypto so that I won't tell you what I don't know. Maybe if somebody who knows what they call the other digital assets, you can just share that with us in the chat box, right? You can share that with us in the chat box. So the downsides: extreme volatility. It can crash for as bad as 50 to 80% crashes can happen. No underlying asset backing your investment. It's just That's why I'm struggling to understand it. What is backing? Fiat is backed by gold, but crypto, what is backing it up? I don't know. And scams and rug pulls are common. You see some people, they say they release one coin. After a while, they say that coin has disappeared, and people put in so much money, and that coin disappeared. That coin disappeared when there was no coin at all. Now they really told us it is existing in our mind. And so when the thing disappeared, it is gone. And for us in our own climb in Nigeria, there is still regulatory uncertainty about it. It's not, though we say it's globally accepted, but it's not clearly defined here. So it has high risk, it has high reward, and it is best for those who understand it deeply. If you want to go into crypto, if you understand it, you can do. But if you don't, please, I beg you, stay on the sideline. Don't jump, don't cross, don't go beyond your level. Next, we want to look at option 4 is traditional real estate. Traditional real estate is when you buy, probably you invest in rental property, you put your money, you buy a property somewhere, and you do the property management, or you buy land, you keep it for the long run, which we call land banking. Those are traditional real estate investment options. What works with this? It is tangible. You can see it. It is tangible physical asset, right? And it has long-term value appreciation. If you hear somebody bought a land for 15 or for even those ones, it's not even far away. There are some estates here. Property Mama is here. There are some estates that were sold for how much? 30 million some 4-5 years ago. Now selling for 90 million in the same neighborhood, right? Not too far. That's just not too far from here, right? So it has long-term value appreciation, and it has rental income potential. That's if you go into rental property. Also, with traditional real estate, you create generational wealth transfer. I remember my first property that I bought, which incidentally, I don't like using the word unfortunately, I bought from Omonile. When I bought that land, I took my son to that place. I went to show him. I said, well, maybe this land is for you guys, or you can have it. I'm just doing this only for me to go there like a year or two later. I was looking for the land like needle. That land had disappeared. I bought from Omonile. So be careful, even if you're going to do traditional real estate, please mind who you deal with. Contact or consult real meaningful realtors. We will not hesitate to guide you through. Now, as good as traditional real estate is, it equally has its own downside. One, it requires high capital requirement to start. Remember what I said, some properties were sold at 15 million, 10 million, for you to get a good land in a good location, you need high capital, right? But even if it is property that you bought, tenant management can make you go mad. I know people who bought properties and sold it because of tenant issues. They will pay today when they are supposed to pay. They will not pay. In Nigeria, I'm not talking of in the abroad. Though in the abroad, the case is different. They just eat your account, But here in our own environment, is not as seamless as that. Right. Also, another challenge with traditional real estate is that it is illiquid. Do you know that it is possible for a person to have a property worth 100 million, let's just say, and that person has a need for 10 million and is not able to meet it because that property is a lump sum. He can't divide. He can't, at that point that the money is needed, he can't divide that portion of 10 million out of the property. And at the point that he even needs the money, he may not be able to get a buyer for that property, even if he's going to sell it at a distressed sale. He may not get somebody to buy it. So traditional real estate is highly illiquid. Also, if care is not taken, depending on the kind of tenancy agreement that you have, maintenance cost reduces your net returns. So it's a proven well builder, but demands time, capital, and requires your involvement. Now we want to look at option 5. Option 5 is the buyback or the co-ownership investment model. The buyback or the co-ownership investment. I'm going to talk a bit more about this as we go on, but let me know. This one gives you defined entry. What does defined entry mean? You know when you are going into it. You are going into it in April. You can even say you are going into it on April 17th. For those who are going to sign up tomorrow, even later tonight, you have your defined date. You choose how much you want to go into it with. You can start with as low as ₦1 million. You know exactly where your money is going because your money is asset, your investment is asset backed. They tell you are investing in so property in so location. you have a defined amount, defined date, defined property. Also, you have a defined return. Upfront, it is agreed that you are going to get this fixed amount of returns on your investment. The profit is agreed upfront. No guessing, no hoping. Is a clear number, clearly and specifically stated. And lastly, you know that I said it is a definite investment, defined entry, defined return, and a defined exit period. The developer at the end of the period buys back your stake at maturity. You collect and you move on. You don't have to continue. You collect and you move on. You can decide to continue, but you don't necessarily have to continue. It's a fixed thing, right? So we want to look at, we said this webinar is about comparing these 5 different investment options. And if you can see the screen, those on Zoom, sorry, the apologies to those if you're connecting on IG or Facebook. I'll try to read it out to you. For those on Zoom, you can see my screen, right? We're looking at the different aspects, the criteria. We're looking at fixed deposit, stocks, crypto, traditional property, and buyback. Capital to start for fixed deposit. You can start with 100,000, 200,000. With stocks, you can start with low amount. With crypto, low amount. Traditional property, for you to start, you need to start with high amount. For buyback, your startup capital is higher than fixed deposit, stocks, or crypto. But it's moderate. Doesn't have to. It's not as high as traditional real estate. Excuse me, please. Your returns on each of these assets. For fixed deposit, we can say it's partial or yes, it's agreed. You know, you are investing at a particular rate. Yes, it's agreed upfront. But for the returns on stocks is not guaranteed. Returns on crypto is not guaranteed. Returns on traditional property, it can only be speculated. It's not guaranteed. But for buyback, it is agreed upfront. Is your security, what we're looking at, the next criteria we're looking at is asset backed. For fixed deposit, yes, if you are doing CP or whichever they tell you, this is what they are investing in. For stocks, yes, it's equally, you are buying UAC, you are buying whichever company you are buying Apple shares, Microsoft, whichever, it is also there. For crypto, there's no asset that is backing it. For traditional property, yes. For buyback, yes. The time needed, that is your involvement for fixed deposit, is minimal. You just need to do, buy it online once it's there. For stocks, I told you before, you have to be reading the paper, you have to be knowledgeable about it. For crypto, it's a daily thing. You are actively involved. For traditional property, the same thing, except you are doing land banking. If you are doing rental property, the time needed is very high. But for buyback, zero involvement. Nothing concerns you. Just agree, leave the money with them. The money is running. The exit date for fixed deposits is defined. For stocks, no defined exit date. For crypto, no defined exit date. For traditional property, no defined exit date. For buyback, yes, it is clear. We need to move a bit faster now because there's a particular time I don't want this webinar to exceed. Also, for inflation protection, fixed deposit, we said it. Well, inflation is always, you can't hedge inflation with fixed deposit. For stocks, yes, you can, maybe not. For crypto, it's not certain. For traditional property, yes. But for buyback, it is structured. It is already there. Whatever you are getting is above inflation rate. Then the stress level that is involved for fixed deposit is low. For stocks, it's medium. For crypto, very high stress level. When you hear the rate at which it goes, that's how your blood pressure will be going and coming. For traditional property, if you are doing rental property, the stress level is very high. But for buyback, zero stress level. Zero stress level. Who is buyback built for? Who are the different people that can consider buyback? The busy professional, the diaspora investor, the banker or the corporate employee, the business owner, first-time investors, and somebody who wants to diversify his portfolio. The busy professional can consider it because you don't have time to monitor markets daily. You want returns without the work. The diaspora investor, you've been born before. You need structure you can trust from abroad. The banker or the corporate employee, you understand numbers. You want a model, not a gamble. For the business owner, you're looking at, your money is always tied up. But buyback gives you a clear timeline of exit. You can plan and say, this money I'm putting here, by the next 6 months, by the next 12 months, I will use it for another transaction. You can plan with it. For the first time investor, you want to start right. You have a clear structure. It removes fear of the unknown. And for the diversifier, you already invest elsewhere, but buyback has a structured, low-stress layer to your investment. I said it at the beginning, I'm saying it again, that every investment above is valid. The difference is for you to know which one is the best for you. It is the one that is good for you that you can now choose. Somebody can just feel like, I prefer my money to be in stocks. Fine. I prefer my money to be in fixed deposit. Fine. But if you want certainty over speculation, if you want returns without daily stress, if you want a model that works while you live your life, you are balling and your money is growing, buyback was designed for you. But there are questions to be addressed. There are fears. Oh, I was discussing with a prospective investor like 2 days ago, and he was asking, he was drilling me about this thing. How am I sure? What? So there are some things you want to consider. How is this different from just giving your money to someone? It is not. It is not like giving your money to someone, because this investment is tied to a real property asset, not a personal agreement. It is documented, structured, and exits on a defined date. What if I need my money before the holding period? Well, like any structured investment, early exit may not be an option. True. That's why we review your financial position is reviewed from time to time. Is it really risk-free? Let me tell you the truth. No investment is 100% risk-free. But asset backing documentation and the clear structure significantly reduces your exposure, right? It is clearly defined. But why not just put it in fixed deposit and slip away? You can. You can. And it's valid. But with inflation eroding naira value, fixed deposit preserve your money. They don't grow it meaningfully. We are only seeing the figure there. But the truth is that money is losing value. After all that we have said, what is the next step? You've seen how every option compares. You know which one is built for clarity, structure, and peace of mind. You know. I'm not going to, but you know. So, after this webinar, you can send a message. You can schedule a call. It's no pressure, just for you to get clarity on what exactly you want to do, on how to go about it. We can review available. There are some limited time opportunities, because these opportunities are not perpetual. And because of the increasing cost of development, because your money is going to be put in real estate, because of the increasing cost of development, rates are dropping. So it is for those who come in early enough that get the best. You invest with full clarity. Define entry, define return, define exit. I said that, and I can't say it too much. So the people who win are not those who wait, are not those who are thinking. It is no intention that wins, but those who take action. So today I want to ask you, which team are you? Team intention or team action? If you want to let me know, you can just type in the chat box, which team are you? Are you in team intention or team action? Team intention or team action? I'm very happy. I'm very sure that somebody gained something from this. And I would very much appreciate if somebody can just unmute and just tell us, or you can type in the chat box if you have gained anything beneficial from this conversation, or you have a question to ask. We still have a few more minutes that we can answer some questions. Can you just indicate if you have team action? Thank you. Team action. So if you're in team action, my phone lines are open. 070-3091-0000. I'll give you that again. I'm typing it in the chat box so you can copy it from there. You can copy the number from there. Let's have a conversation after this call. I'll guide you through. I'll let you see the available options. Thank you very much. I can see team action, team action, team action. Thank you, thank you, thank you. So the ball is now in your court. Like we used to say in those days. We say, with these few words of mine, I'm sure I've been able to convince you fully that, well, you have an option today. You have a choice to make. You want to go for the cashback or the buyback real investment option, or any other one. I'm available. Reach out to me. I remain yours, Mr. Meaningful. Thank you very much for connecting. I very much appreciate those who have been consistently since day one that we resumed our weekly webinar. I want to recognize my mother. My mother is on this call. She follows us on a weekly basis. Mom, Thank you very much. Yeah, Mommy Tokumba Kinshu. Thank you so much. I appreciate you. I appreciate you. And you know I cannot appreciate you enough for all that you do and you keep doing. Thank you very much. My colleagues who are here on the call, Abiba Oguma, Property Mama, yeah, Billionaire Faith, Barrister Amina, oh, my boss, my chairman, Uncle Devon. Thank you very much. I appreciate everybody who has connected. And my, you see, I have people here. If I unmute the mic, but they may not want to do because there are people who have been benefiting from this investment for like 4 or 5 years. They've been doing this back to back, accruing and accumulating their investment, and it has been working for them. Yeah, thank you very much, Mommy Oluwaseun. You've made inquiries about this. I'm happy you had this. If you still need any clarification, any other person on the call, you can reach out to me. Once again, I remain yours, Mr. Meaningful. Bye for now. I look forward to seeing you next week. For the sake of time, we will not be able to take a call directly, but my lines are open. My lines are open. You can reach out to me. I'll be very much willing to give you further clarity in case you need any. Bye for now. I'll see you next week when we'll be having another wonderful session on the Meaningful Realtors weekly webinar. And if I can just tell us ahead of time, we're already thinking about what we want to look at. Next week, we might be looking at agro real estate. That is another fantastic investment option in real estate, but requires some care. We have done some research. We've done some background work. We are working for you. Yes, we are working for you. I've done some background work that you can benefit from. So we'll talk about that next week. If nothing changes, or we might still want to give some further clearance. Okay, I think maybe we should just take cash back. Let people know more about it till the end of the month, so we will know that we have used the month of April for real estate co-ownership or buyback option. And I'm very sure you will enjoy what you're going to hear next week. Thank you very much. Uncle Shitu, thank you for connecting. I appreciate you. Bola, thank you. Oh, Bola, you are afraid then. Don't worry, you are covered. My boss, Osi, thank you very much for connecting. King James, I appreciate you. Ibiduni, Odunayo, once again, Billionaire Faith, I appreciate you. Omowumi Onofua, Olutosin Akilusi, thank you very much. Andrew Callistos, I say a big thank you to everyone that connected this evening. We see you again next week by God's grace. Until we see you again, everything you put your hand for will work. Bye. Oh my God. Thank you, Holy Spirit. Thank you, mighty God. Thank you, eternal Pages. Bye here. Bye here.